Chris, good morning. How are you?
Well, a little bit better than usual, but man, let me tell you, all this economic uncertainty, I think it's starting to backfire a little bit. Usually, when you see all these tariffs and all this other stuff, then the market's going down. You would see that 10-year going down as well, right?
Yeah, yeah,
You're not seeing that today.
yep.
Okay, that is not good. That means
Oh,
that
so
people.
can you explain in layman's terms why is it not good for the CPI PPI data to be as good as it is, but the 10-year to not go down?
That means that the bond market might be expecting, at least in the short to medium term, higher inflation. Okay. And the thing is, like, while the Trump administration is playing this dangerous game of, put on tariffs, take tariffs off, put on tariffs, take 10 tariffs off, and that may bring uncertainty and less capital investment. The challenge is on the longer end, people are like, "Oh, maybe we're actually going to get stagflation." Like this whole thing right now where you just went over and started accusing the EU of basically being created to fuck over the US. I mean, that's just plain out wrong. And now it's kind of like people are a lot less serious. The other thing that you have to remember is a lot of these countries, they're also US debt buyers.
Yeah.
So if you keep messing around, people are not going to have confidence in the US. And eventually, those debt buyers will not buy US treasuries. And if they don't buy US treasuries, then you're basically going to have to figure out other customers to buy them.
Chris,
Right.
what was your reaction to, I think, and I might get the number wrong, but I think Canada sold 300 billion of US bonds. Did you see that?
I did not see that. I have to look through it, but I didn't even know they had 300 billion in bonds like that. So,
Yeah. So,
um,
but it goes to your point, which is that if they're starting to sell bonds, then that's bad. Yeah. So March 11th, the size is undisclosed. I don't know where I got 300 billion from, but they did say, "Hey, screw you guys. We're selling your debt." Right?
yeah. Well, that's the thing. Like, when it comes to debt, you have to basically show that you're a country that's going to be stable, that's going to grow, that you're a safe place to make put your money towards. So as the markets come down and you're starting to see inflation rise again, people are like, hey, wait a second, like, do I really want to hold on to the country who's kind of like every day causing themselves to be isolated? Like, do you really want to be a part of that? And so I don't know. We have to just look at the market structure. And I think this is a really bad position to be in where you kind of, if you're one of the big, look, the US is a debtor nation. Okay. We've got $36 trillion in debt.
By the way,
If,
real quick before you continue, the number is Canada owns 300 billion of bonds. So, if
yeah.
hopefully they don't sell all of it, but they do have a decent chunk of US
The
bonds.
challenge is Trump is fighting everyone. So now everyone could coordinate something like this and really like hit the US hard, right? So imagine right now the EU, China, Russia, all these guys that hold treasury bonds, they start dumping them in the same way, because he keeps going. I mean, he's got to pick and choose his battles, Like I get that you want to have big beautiful tariffs and all that stuff, but you can't do that to the entire planet all at the same time. I mean, that's how you cause yourself to be a pariah nation, right? Where people won't even take you seriously anymore. So I don't know if this is the art of the deal, but this is not good. The one thing I have been reading is some of the stuff coming out of the White House, just Howard Lutnick being a little too much of a like a yes man and basically like not reining Trump in a little bit from his baser instincts, and it's causing a lot of challenges. So as an example, you know, Politico did a great report and showed that, like, even people among the Trump administration, they're getting kind of tired of Lutnick and Lutnick's ideas of, hey, let's just tariff them, let's just tariff that, and the president's a great guy, and it's like, dude, the last thing you want on your team is a freaking yes man, you know. So I think that's where we are. I think when you look back, you had Wilbur Ross and Steve Mnuchin, who were much better at maintaining economic confidence. So even though we had tariffs, remember, we still tariffed China. We did it in a way where it was more structured, and because of that, we were able to do it in a way that no one really, like, you know I don't know, like, thought the US was actually like a bad guy. So right now, I think the Trump administration is picking too many fights with too many people all at the same time.
Chris,
If this
did you believe the bounce that we had yesterday? Because it was a good bounce. Did you believe it at all, or you kind of expected the red day to come after it?
I think until the Trump administration gives any indication that this whole tariff regime is over, I think we're going to have a lot of volatility with people basically saying, "Oh, well, maybe this is the bottom," and then it's like, "No, no." Then the next day, Trump says, "I'm going to put 200% tariffs." Like, I I haven't been able to write on Patreon for about a month. Like, and the reason why I haven't been really able to write anything is because anything I say gets wiped away 12 hours later. You know, anything I try to even project out, it doesn't make, like, literally the sands are shifting under our feet by the minute. So it's really hard to invest in this current market. There are a couple of players, like companies that you can sort of like make some good money on, but overall, I think the market is just, I don't know, it's a very tough market to be in, you know,
It's
because there's
weird
not a
because
lot of
if you
going.
were in value over the past couple of days, you've done well, the Verizons of the world versus Nvidia's. But then yesterday we get a reversal. Verizon's down 5%, Nvidia's up 7%. But then today it's like so I think it's very wishy-washy. And to your point, it's hard to come up with a strategy, which means you might just stay in cash instead.
I think that's what a lot of people are doing. A lot of people are, there is a lot of money on the sidelines that's just basically like, look, I don't want to get into anything right now until there's more concrete information on what kind of policies are actually going to be applied, and they're going to stick to those policies, you know? See, the thing is, people, like, if you say I'm going to put a 25% tariff on X, that's fine. That you could do that. The problem is when you go 12 hours later and says, "No, no, I'm going to take that back." And now you have no credibility, you know, and then you do 25 next week because they didn't live up to their demands or whatever. Like, it's, this is not how you conduct business. And if this is some kind of grand strategy, I'm not so sure how successful it is, but the market is clearly saying we would rather not be involved in all of this, you know. So that's where we are. There are going to be one or two winners that I think people really should focus on. Like you said with the defense contractors, Rheinmetall was a really good one because especially if you look at their Oricon system that has like air burst rounds for anti drone stuff, it's like second to none. You really got to check that out. That's I spoke to.
Dude, the fact that you're becoming a European defense stock expert now just
No,
shows
no,
where we are.
I brought up Rheinmetall before. Like, me and Amit Patel actually spoke about it like a few months ago when Ukraine, like when the, what is it called, the Germans were sending over equipment. Rheinmetall actually has some of the stuff that you really really need in this war to succeed. So yeah, yeah. But look at Venture Global, VG.
Yeah, I saw a lot of insider buying happening there.
Yeah. Well, the insider buying is one of the things that that's, you know, a good thing, but at the same time, they are, if there is a deal to be made that's low-hanging fruit for the Trump administration, this would be it. The US, because of its trade imbalance, quote unquote, trade deficit with the Europeans, you know, one of the tactics that they're probably going to use is like, look, you are too dependent on Russia for natural gas, become dependent on us for natural gas. And Europeans might be forced into buying more natural gas from us instead. In which case, now companies like Venture Global would end up benefiting, especially because they have so many cargoes on the spot market. So longer term, there's capacity that's going to be coming on the US. But the challenge is if you don't have long term buyers, then it's hard to get financing. So the Europeans might end up developing something called the Japanese model, where the Japanese end up taking equity stakes in US LNG, what do you call it, exporters, so that this way, whenever they buy stuff, it's almost like you're getting a discount, right? So think of it this way. Like, imagine right now you love going to Chipotle. So you're like, oh, you know what? Maybe I'll just buy some Chipotle stock because I love going to Chipotle so much. So now what happens is every time you eat at Chipotle, you're giving money to the company, but at the same time, you're getting a, you know, you're the company is going higher and you're benefiting from that price increase. So it's kind of in a similar thing, but it's not 100% like like guaranteed in stone. There have been conversations about possibly renegotiating some of the deals that are out there, but companies like Venture Global are going to benefit massively from natural gas.
We did
Exports.
see speaking of Russia and natural gas, we did see Russia rejected the brokered peace deal this morning. Bloomberg reported. In your opinion, when do you think they officially accept some type of deal to full on have a ceasefire, or not even a ceasefire, but an end to this?
Once again, this is the mistake. This is, in my opinion, it's a mistake by the Trump administration by basically being so so what's the word, like so in favor of the Russians that basically you've emboldened the Russians. Like the one thing you don't want to do is negotiate with someone after you've said, like, I support you guys. Like, so now he's weakened Zelensky and Putin has said, you know what, I can kick this guy. So basically, Putin is trying to get everything that he possibly can. And yeah, I don't know if this is going to end up working to the Trump administration's favor. The one thing you got to hand to the Biden administration is that they had like max pressure on the Russians, and the Russians were losing men, material every day, and the Europeans, we could have just kept supplying them with natural gas and so it's cut off all natural gas from the Russians, and then like literally like take their economy to ground zero, and that could have been effective. Now it's not, doesn't seem to be the case. So now the Russians are a bit emboldened. They're recovering a little bit. They had some recent gains in the Kursk region. So I think the Putin has basically said, you know what, we're gonna take more, or we're gonna negotiate for more. So I don't know. This is where this is where people in the Trump administration, I'm hoping that they're not just a bunch of yes men and they actually give him good counsel. What do you think about that?
I mean, dude, I have no idea how this is going to play out. Like, I don't even know. I have like, because what he did with Zelensky in the office, I think, was so shocking to the entire world. I said, ironically, that's what got a lot of the European defense contractors to start getting ready to fund their own war, and that's what's helped those stocks. But then again, how is Putin going to react to that? And if Putin does feel emboldened, then when does this thing end? At what point of negotiations is it going to take? How much are we going to have to give up in order to get him to officially come to the table? I
Do
don't
you
know.
know? Do you know what I think it was the biggest mistake so far among by the Trump administration? Cutting off arms sales to the Ukrainians, like that, or not even sales, but cutting off arms aid to the Ukrainians. That showed the world that the U.S. is actually probably not a great partner to be with, and any security guarantees are basically paper guarantees, and they don't really matter.
But the pushback, though, from the Trump administration is that we've spent way too much money dealing with this, and at some point we have to stop, right?
And the Ukrainians has been spending lives, dude. There's a big difference. Like the last thing you want to do is be like, yeah, let's compare the freaking almost nearly million people that the Ukrainians have lost versus $300 billion by the Americans. Like I get America gave money and stuff, but the Ukrainians are literally playing with blood, bro. There's a big difference. Imagine right now we had gone to Europe and said, you know what, England, why don't you guys, why don't you guys negotiate with Hitler? you know that's where it's coming off. So yeah, I'm a man of peace. I want peace. I don't think the Ukrainians should be, like, I want this war to be over, but not on the terms that the Russians are willing to do it at. And I don't know, the market's eventually going to piecemeal that. The challenge though is that by doing this, the US is basically basically caused this internal feeling that the US is not a reliable partner. And because the US is not a reliable partner, why should people buy the F-35? Why should people buy US defense systems that can basically not be supported by the US in time of war if you don't follow their policy? So
let me ask you this question. So if Trump continued to support Ukraine and didn't isolate from Zelensky the way he did a couple of weeks ago in the Oval Office, and we didn't have this whole new tariff policy regime, what would be the difference between the Trump administration and the Biden administration?
keep your shit behind closed doors. That's the difference. You can negotiate for peace, just do it behind closed doors and terms that are not gonna politically like mess you up. the Biden administration for I don't even know if Sleepy Joe was awake, but at least they had a clear, concise message that we have Ukraine's back. You know, right now you can't be this guy that's like, oh, you know what, you're gonna sign this deal. Oh, if you don't sign it, we're gonna cut you off. Oh, the Europeans are the bad guys. Like, come on, guys. Like, this is getting out of hand at this point. The U.S. is starting to become a pariah state, dude. That's just the facts that I see, and I don't know.
So Google's down 2%, Apple's down 2%, Nvidia just went red. I mean, this seems like the most predictable red day after yesterday's green. Do you think tech can't go green until there is an end to either the Russia situation or the tariff volatility?
I think
is there any way we can rally in the midst of those two macro things happening?
I think there just needs to be straightforward policy on what you're gonna do, because like the thing is, like, if you go after this trade policy and like tariff policy, these countries are gonna hit back at you, and they're gonna hit back at your strongest parts, like that are basically gonna cause this reaction. So they're not gonna like. You think Europe is like, oh yeah, let's go like not buy some Fords or some shit like that. Like, no, they don't care. What they are gonna do is like, oh, you know what? Maybe we'll just start hitting the tech companies like Meta and Google and Microsoft and everything else that are more painful to the American economy if they end up taking huge hits. So I think right now we're at a point where the U.S. is basically, in my opinion, all right, and this is my opinion. If people don't like it, they don't like it. I'm sorry. Has overplayed their hand. They've created too many enemies. You've created enemies with literally like the Canadians, like the most friendliest people you could possibly be with, and you're attacking them on a daily basis. And then the Mexicans who are like, are you serious right now? Like,
okay, so do you think Canada was going to do those 25% tariffs on exports to electricity to New York? They took those away yesterday. Do you think there's, at the end of all of this, maybe in 3 months, hopefully not in 3 years, there will be some negotiations that lead to better free trade agreements? Or do you think it's all hoopla for Trump's ego around tariffs right now?
That's the thing. I don't know. I really thought that there was some kind of grand strategy that could theoretically be applied, but at this point, I don't know. And the thing is, the people around him are not giving him good counsel, in my opinion. And I think eventually you're going to start to see heads roll, because you're in a position right now where you do control the House and the Senate, but it's with such thin margins that if there's a chance that the Congress is going to be the one that takes the brunt of the storm during midterms, Republicans are basically going to turn around and say, you know what, screw you. We don't give a shit. We're not going to follow what you want, and basically use pressure on Trump to basically change some of the things around it.
Chris, we got to stop you there. Stay with me for 10 minutes. We got Bessent live on CNBC. We'll react to that, and then we'll be done for the show today. But let's get Bessent on CNBC.
For joining us.
Good morning, Sarah.
Let's start right there, because Carl just went through the markets. It's another sort of turbulent day here. The volatility has really picked up. We're down another more than 3.5% for the week, almost 10% from the recent highs. I know that you guys have brushed this off, but I do wonder if you're starting to get concerned now that these losses are picking up.
Well, look, Sarah, what we're focused on is we're focused on the real economy. Can we create an environment where there are long-term gains in the market and long-term gains for the American people? I think, having been in the markets for 35 years, I know the market is prone to big unwinds like this. I think we've seen, a lot of position unwinding, and I can't really speak to that.
I guess, and this has been consistent with your view, but 62% of Americans own stocks. I mean, it's near 20-year high. So how can the White House not be concerned about hardworking Americans' 401k plans?
Look, Sarah, I didn't say we're not concerned. I'm not concerned about a little bit of volatility over 3 weeks, because if you look over the long term, the reason stocks are a safe and great investment is because you're looking over the long term. If you start looking at micro horizons, stocks become very risky. So we are focused over the medium long term. And I can't tell you that the market is going to go up today, tomorrow, next week. But I can tell you that if we put proper policies in place, it's going to lay the groundwork for both real income gains and job gains and continued asset gains.
Understood that you're focused on the long term, and part of it is these tariffs, but now there's concerns about a possible government shutdown. Senate Minority Leader Chuck Schumer saying the Democrats are going to reject a government funding bill. We have this deadline tomorrow night. What is your expectation, Mr. Secretary, and how destructive would this be?
Well, it'd be incredibly disruptive. And look, Sarah, I know you said you've been in Singapore all week, but I think the underreported story since January 20th and of the past few weeks is this incredible Republican unity and this Democratic disarray. Is that we've seen Speaker Johnson get through with President Trump's help a tax bill, get it over the Senate. We saw a clean CR bill. And if Senator Schumer wants to reject it, hurt the American people, close down the government, and they're going to own any of the problems that go with it, including economic slowdown. And if this is all they got, then they ought to regather and think about what they're doing to the American people and the economy.
You do think that a shutdown would cause economic harm?
It can't be good.
Yeah, I mean, look, the market's been really focused on tariffs, Mr. Secretary, and it's been another sort of up and down ride this week. A lot of uncertainty among business leaders. This morning, President Trump threatened a 200% tariff on Europe on wines, champagnes, and alcoholic products coming out of France and other EU countries. And I do wonder how that comes to be. Was this premeditated? Did you know about this? As this is in retaliation to what Europe did, in retaliation to the steel and aluminum tariffs, but 200%?
Look, I was with the Business Roundtable yesterday. I think it was 135 CEOs, and I talked to them about our plan, which includes tariffs, deregulation, and what I call reprivatizing the government, and bringing down this incredible level of government spending. And one or two items with one trading block, I'm not sure why that's a big deal for the markets.
I think that the big deal for the market is just the not knowing what's next and what the target is necessarily going to be, and also not knowing where this stops. Because if we ratchet up tariffs, they retaliate, we go higher, then what?
Well, look, sir, it could go the other way too. Look, that's the nature of these reciprocal tariffs. That all President Trump is asking is for countries to take theirs off. So we have identified some strategic industries, the steel, aluminum, likely autos, but everything else is up for grabs, and that's going to be a decision that's made by our trading partners.
Yeah, that was one of my questions, which is how these tariffs come off, if that is ultimately the goal, because it feels like once they go on, it just gets out of control from there.
Well, again, that's a decision by our trading partners if they want to ratchet things up. And I could tell you, as somebody who's studied the history of this, it is the surplus country that takes the greatest hit. We have a big trade deficit with these countries. So in the event that there's a back and forth with tariffs, I would counsel these government leaders that they are on the losing side of this argument economically.
You mentioned the Business Roundtable that you attended yesterday. What did you hear from CEOs on this issue? How much frustration or nervousness is there?
Look, I think that we were always going to have a transition from this incredible, unsustainable level of government spending that we had. I think last week I called it a detox. And generally, they're very supportive of that. And we're going to have a transition. We're going to de-lever the government and re-lever the private sector, both through the regulated banking system and through industrial deregulation. They were very excited about that. And the one thing in terms of certainty that everyone was the main topic is the tax bill. And we're working on that every day. I had a meeting with the Senate House leadership and the Kevin Hassett from the White House yesterday. So that's moving forward nicely. And I'm confident that that's on track. We're not going to have the biggest tax hike in history on Jan 1. We're shooting to get this done this summer. And I think that's going to provide a lot of certainty for American households and for industry.
I definitely want to get to that in your meeting and where that's going on Capitol Hill with the tax cuts. But just while we're on trade and the response from corporate America, when you say that when we're in a period of detox, you used that word on CNBC last week, is that a euphemism for recession?
Not at all. It doesn't have to be, because it'll depend on how quickly the baton gets handed off. Our goal is to have a smooth transition. But I tell you, Sarah, the easy thing for us to have done would have been to come in and just keep this massive spending level going. And it's unsustainable. But could we have kept it going for a year, 2 years, maybe even 4? Maybe, but you're risking a financial calamity. So, we are trying to get this tax bill done. We are controlling expenses. And when we get the tax bill done, so if you can change the trajectory up revenues, up economic growth, hold expenses flat, or do the unthinkable and cut expenses, then that's a pretty good trajectory on growth. And if we go back to the model in the 90s, that's exactly what happened. We'd see interest rates come down, we'd see the private sector take up the slack from the government. Because right now we have excess employment in the government, and that those people can be moved to the private sector.
Yeah, the question is what's realistic when it comes to cutting the debt. I think you yourself have said you want to get to a 3% deficit to GDP. We're almost 6.5% last fiscal year. Doge is working on it. $115 billion in Doge savings so far, though. So that's not going to make a dent. Where do you see the meaningful cuts coming from when you talk about rebalancing away from the government?
Well, look, I don't know what your family budget is like, but to me, $115 billion is a lot of money. That's 5% of the deficit last year. So I think that's a pretty good start. And it's only been 6 or 8 weeks. So there's probably a lot more that we can do. And there's 2 parts to this. It's accelerating the economy, growing the revenue base, and controlling expenses. The U.S., we do not have a revenue problem. We have a spending problem. The government revenues are right at the long-term baseline that the previous administration just blew things out to the upside, and we're trying to get this under control.
What about the economic signals that you're seeing right now? We saw this surge in small business optimism after the election because of some of the policies you're talking about. And then for the second month in a row now, we've seen a drop. Also, the Atlanta Fed, for instance, is forecasting a negative growth rate for the first quarter. I could go on about some of the confidence warnings right now, but I am curious if you're concerned about what you're seeing in the underlying economy.
Well, sir, I think you've been away, but I think the Atlanta Fed has revised up their number to a positive number. That was due to gold imports, which was kind of an anomaly. So, I'm not worried about a very noisy indicator. And again, as I told the Business Roundtable yesterday, as I tell your viewers, what we're trying to do is create economic certainty. We're going to do it with the tax plan. We're going to do it with deregulation. And I also said to the Business Round, I think it was 135 CEOs yesterday, if you came out with a plan similar to what Doge wants to do with the federal government, all your stocks would go up 15 or 20%. It would be considered a miraculous restructuring, cost savings, and put you on a sustainable course. So I think we're not getting credit for this yet. I think we will. So.
Yeah, I mean, and part of what you want to do is lower interest rates, which you've said, and that should happen if the government cuts spending. I do wonder. We've seen a drop in rates, as you've said, from near 5% on the 10-year, we're down to 4.3. But it's happening for the wrong reasons, right? It's happening because of economic slowdown concerns, and it's moving in the opposite direction as stocks. So, do you want to see rates fall, even if that's why it's happening?
Well, look, let's disaggregate, Sarah, why rates are going down. We had a surprise CPI yesterday on the downside. We had a flat PPI. So maybe the inflation is getting under control, and the market's going to have some confidence in that. There are a lot of reasons that rates can come down.
I wonder also what you make of the U.S. dollar. I mean, this is right in your territory as hedge fund manager, I know, and also Treasury Secretary. U.S. dollar's been weakening as well, which wasn't necessarily what was supposed to happen with the tariffs, and whether that speaks to anything about foreign demand for our assets in the U.S. right now.
Well, Sarah, I don't have to tell you or anyone on the show, markets live in the future, and the U.S. dollar priced in a lot after President Trump's victory and the Republican sweep. So, a lot was priced in that it's natural to see an adjustment, and I think the markets adopted a wait and see attitude. And the other good news for global consumption is that for the first time in 25 years, the Germans are going to take off their debt brake. This is something that the French leadership had tried to do. The Italian leadership, the whole EU have been very frustrated with German spending. And President Trump has gotten them to up their spending on military. So we could see an upside growth surprise in Europe. China seems to have stabilized with some of their working groups, so that other countries are doing better. It's natural that after this big surge in the dollar, that other currencies could do well.
Yeah, and we have seen the euro shoot up like that. Since you mentioned China, I'm curious if there's a dialogue going on between you and your Chinese counterpart, whether there's any talks scheduled for President Trump and Xi, just given the U.S. has amped up the tariffs to 20% on Chinese goods, whether there's any capacity or scope for discussion about what to do about that or a potential deal.
Well, there's always capacity for discussion, and a lot of what President Trump does is maneuver into a good position for a deal. So I've had one conversation with my Chinese counterpart. We had a very, very good discussion. I talked about some of our national security concerns, about them buying sanctioned Russian oil, sanctioned Iranian oil, the fentanyl crisis. And Sarah, the other thing that we've seen that with President Trump's initiatives, with the tariffs on Mexico, on Canada, on China, we've seen the fentanyl imports at the border down 40%. 40%. And think how many American lives, think how many families that saves. So, yes, we're having a dialogue, and I'm sure at some point, President Xi will engage in high-level talks. I can't tell you when.
Right. So you did mention that you met with congressional leaders on Capitol Hill about extending the tax cuts. Where are we? What are the biggest challenges so far in getting this done?
I think it's just coordination. Speaker Johnson did a fantastic job of getting it out of the House. It's with the Senate now, and I'm hoping that they could get to a joint markup sometime in the coming weeks.
Isn't it hard enough to roll over the 2017 tax cuts? How do you pay for some of the other stuff that they want to put in here and that the president wants to put in here? Increased SALT cap, tax on no tax on tips or Social Security, that sort of thing. Well,
Sarah, I think to a lot of people it's not obvious that if we extend or make permanent the TCJA, Other than getting back full expensing, there's no stimulus there. So we are just keeping the economy on the same level that it is. So it's important to add the president's initiatives here to give the economy some impetus. And again, that's going to be through a combination of growth and some spending restraint. And look, I've been in the investment business for 35 years. I thought I understood CBO scoring from the outside. Shame on me. Now that I'm on the inside, I see how crazy some of this scoring is. And for instance, CBO, it's all in a 10-year window, assumes a 1.7, 1.8% growth rate no matter what. If we have the biggest tax hike in history, CBO will tell us we're going to grow at 1.7, 1.8. And if we are able to get the tax bill through, get some new stimulus in, then we're still going to grow at 1.7, 1.8. Neither one of those scenarios really holds water in the real world. So we're trying to put the real world projections together, share those with the House and Senate leaders, and they're very receptive to those.
I also wanted to ask you, while we have time on Ukraine and on Russia, because I know you've been involved in these discussions. You've been to Kiev, met with President Zelensky. The President Trump threatened this week, if Russia doesn't sign on to this ceasefire, there will be financial repercussions that would be very damaging, devastating, he said, for Russia. And I know you've said also last week in New York that you're prepared to go all in. So what exactly does that look like? And have you drawn up plans for further sanctions or tariffs on Russia to pressure them to do this deal?
Well, I'm not going to show, I'm not going to lay our cards out on worldwide TV, but I could tell you that I was very dispirited during the Biden administration's sanctions level, because I thought, went at a minimal sanctions level because they were worried about domestic energy prices. We've seen crude come down about 15% since Inauguration Day, and that is with the Biden administration, Jake Sullivan, deciding that they're no longer worried about crude prices. So, if we just take kind of a scale 0 to 10, that I think the Biden administration sanctions on Russia were probably a 3. On the way out the door, they took them to a 6. And I can tell you, we wouldn't hesitate to take them up to 10. And again, this is all part of President Trump setting the table for successful negotiations. He's willing to apply maximum pressure on both sides.
No, I know you were very strong on this during the confirmation hearings on your views on this. Finally, we talked about Doge. I mean, I'm just curious, how would you describe Elon Musk's engagement with Treasury at this point? We know that there was some early, stories about the access, but how closely are you working with him at this point, and how much room is there to cut in the Treasury itself?
Well, look, there's always room for better performance, especially when we think about the federal government. And Sarah, what I like to emphasize, I emphasized it yesterday to the business leaders. I want to emphasize it to your viewers. But let's remember, the E in Doge is efficiency. It's not elimination. It's not extinction. We are trying to make the government do better for the American people and right-size it. And I don't think that there is anyone who is happy with the bundle of services that they get from the federal government. So you're sitting in Singapore. I met with some leaders from Singapore yesterday, and Singaporeans love their government. They think that it does good things for them, and they spend about 18% of GDP on their government. If we were to balance the budget, we'd be at 18% of GDP. So why can't we have the government do a better job for the American people at a better price?
Well, we certainly appreciate the time, Mr. Secretary, on all the issues that you're focused on in your portfolio. Sorry for the delay from Singapore. Next time, hopefully in person. We appreciate it.
All right, that is Scott Bessent. Chris, I got to get out of here in 5 minutes, so I want your quick reaction. Before you talk real quick, shout out to Kindly for the very kind super chat. Thank you for the $50, sharing a little bit of gain from Intel. Thank you for the daily updates. Kind, thank you for being here. Congrats on Intel. It's holding 17% even in this crappy market right now. So Congrats on Intel, and thank you so much for the super chat as well. Chris, your reaction to what Bessent said for the past 20 minutes.
I kind of feel bad for him because, this whole tariff thing is probably not his idea. I think he's pretty much more of a free markets kind of guy. And even if he did apply, the tariffs, he would do it in a structured way. The guy is a markets guy. I think the other people are definitely leading things astray. And the sad part is, like, you can't talk bad about home team, right? When you're on the team. So anything that he says, you have to use with a grain. You have to basically, take with a grain of salt. So I say there are parts that he was being very truthful and very honest, and then there's parts that he was basically covering for. And one of the things that he was covering for is the tariff policy, which I think is more of a Trump thing than his thing, but he's got to toe the party line. So he's doing it,
What do you think of his response? And it's not just his response, but the sort of administration's, I guess, go-to talking point. When asked by the media about stock market volatility, they keep saying, think about the long term. So when she asked half of Americans own stocks in their 401k, what do you think about that? His response was, well, in the long term, stocks outperform. Is that an acceptable answer right now?
I mean, it's the truthful answer, right? Eventually, everyone learns to accept reality and basically do okay. The question that I have is that his way of saying, like, listen, we are basically at a point where we need to make some hard decisions early, and that later on those hard decisions will pay off? I mean, makes sense. The only thing is, though, you don't want to put so much emphasis on what you're doing that you're going to cause long-term structural damages to the US's reputation around the world. Like, I understand that there are some strategies at work in the background to get things to change course, especially this thing with, hey, we want to have less workers in the government and more people in the private sector. Well, you got to give private sector more confidence, that tomorrow is not going to be, hey, I'm going to tariff your industry, So, and not to mention one thing to point out, jobs are not nearly as elastic. So imagine right now you're like, you've been working 10, 15 years in the government role doing policy, and now you're like, oh yeah, you know what? We have more manufacturing jobs. You really think people like that are just going to say, yeah, let me go work on the factory line all of a sudden? It's not as, I don't know. It's just, I feel
this is what Jeremy Siegel was saying. It's just like these types of jobs are not the jobs worth fighting for, essentially, right?
Yeah. I mean, long term, for national security reasons, you kind of do want some manufacturing to return to the U.S., but you don't need it to be at the same levels. I think right now we're at a very difficult point in markets trying to read things, and it's not. I'm not talking as an investor. I'm saying, imagine you're a business owner or a company and you're trying to run an operation. Every day things are changing, and those changes are being done literally on a 12-hour basis. That's not how you can manage things. And so the challenge that you run into is that you're going to end up waiting and seeing. Now, is that what the administration wants, which is people curtailing on spending to the point where inflation gets down to a meaningful level, and then they can kind of say, you know what, let's ease off the tariff talk, let's ease off of everything, the tax cuts will kick in, and boom, all of a sudden you've got a booming economy again. If that's the strategy, then this is the time to actually look for those companies that are out there that you find that they're going to do well long term. But you better have a long term horizon. If your horizon right now is 6 to 9 months, you better think twice, because you don't know what's going to happen.
Yeah, it's not as easy as 2024, where we can expect every month to gain 1 or 2%.
Well, the challenge was 2024. There was just so much liquidity in the market, right? So basically, the Biden administration was spending a lot of money. So eventually, that money made its way into corporate treasuries and balance sheet. So the market, of course, is going to go up. The question now is that these policies are definitely going to hit growth, but they're also going to end up hitting companies' earnings. And so right now, a lot of people, and this is the trap that I feel like some people are getting into, they're like, well, forward earnings are going to be X, and because of that, this company is cheap. And I have to remind people, like, forward earnings are just a projection of what they're likely to be based on today's stuff. But that could change 6 months from now, and now your forward earnings looks like complete trash once they revise them down. So be careful of that.
Well, also forward earnings don't matter. If we get into a recession, forward earnings is a pointless metric, right? So we've got to avoid a lot of macro pain.
But that's what I'm saying, that it's just an estimate of what earnings are going to look like a year from now, which no one really knows what they're going to look like. So, so there's a lot of companies that could look cheap that end up actually being rather expensive, So I don't know. Like right now, we need to apply some patience, I guess. I'm not particularly selling anything. I'm pretty much just stacking cash from any income that I'm getting. I am buying preferred equities, basically because they're giving me yield, and they're not nearly as exposed to the general equity markets. So that's one thing. And other than that, I'm just taking up like small like plays like Venture Global, which are, in my opinion, long term they're going to do well, but in the short term they're actually going to be net beneficiaries of some of the Trump policies, which is surrounding like more American products going overseas to balance trade deficits. So the Europeans need natural gas in order to basically grow their GDP and develop, and they can't buy Russian gas, so they have to replace it. And if the Americans are willing to provide something and the Trump administration is willing to kind of back it, then hey, you know what? That's an industry I want to be in. So that's why I'm long on Venture Global.
All right. Thank you, Chris, for your thoughts and opinions. 50% of the chat agrees with you, 50% disagree. That's how you know that we are in very polarized times. And it looks like this volatility and this polarization is not going away anytime soon. This is just the market that we're in.
So. Yep. We're just going to have to deal with it, man. So it is what it is.
All right. Thanks, Chris. Appreciate it. Chris's Twitter right here in the chat. I will talk to you later.
Take care.
Take care.